Quick update before we get into this video. Bitcoin has bounced from $60,000 up to $66,000 and oil has dropped from $90 to $80. I know that there will be some idiots who are going to be asking dumb questions like if my thesis has changed, if I'm wrong. Well, I don't know if I'm wrong, but my thesis hasn't changed at all. This move up that we're seeing right now looks more like a relief rally rather than a higher leg up. Everything that needs to be set for us to go even lower is still in place, and my thesis that I had made in this video when I was making it hasn't changed. Imagine you are at a party and someone has asked you why Bitcoin has crashed from $82,000 straight to $60,000. Well, what we would probably say is that imagine those giants who run Wall Street buy Bitcoin through their fancy ETFs, and right now that whole faucet, which was spread wide open, which was flooding with cash, is now turned off and running in reverse. Actually, that is what actually happened. And then they question you, why? Why is the faucet turned off? Why is there no more money dripping from the faucet? Well, we're going to be talking about this in this exact very video. Before we do that, I just want to quickly mention that I have covered this whole thesis, which I have talked about in detail in my previous video. So if you haven't checked it out yet, make sure to watch it because this thesis is the exact framework on how I got my exact trade going from $80,000 to $60,000. And before we even continue talking about Bitcoin's price action, I want to tell you guys that I do believe that Bitcoin is not done yet. We will see some more devastating price action. And don't you click this video off yet because you heard the news. You want to understand why, because if you won't understand why, you won't understand why you are going to be selling this in the first place. So first, before we do that, let's just do a quick recap. We can see that we had our first major drop on May 15, right when we broke structure right here brutally, going down to $74,000. So we tried to rebound, but again, we broke structure towards the downside and we went and touched nearly $70,000. But on June 1st, we had a devastating liquidity cascade. As you can see, Bitcoin has literally fueled its own run down. We dropped from $74,000 straight to $59,000, where we rebounded on that $60,000 mark, which in my previous video, I told you guys that will act as a support level. But anyways, right now we can see that we're again starting to consolidate a bit, and now we are looking what the price is going to be doing next because it's sitting really close towards that $60,000 support level, which is really important for Bitcoin. Now, this wasn't a random drop at all. This was the exact sequence of what my thesis was talking about. So let's just quickly recap on what are the 5 stages of the thesis that I presented in the previous video. Well, stage 1, which was already completed very quickly. I mean, I did not expect this to happen so quickly, but basically stage 1 was tight money Fed and no immediate pivot. So Warsh comes in as a new Fed chair, which happened. He talks stuff, possibly delivers one symbolic 25 BP hike or a very strong hold on the current rates. Rate cut expectations get crushed, markets stay volatile, and Bitcoin grinds sideways to down. This is exactly what happened after May 22nd. So I did guess that once Warsh comes in as a sworn Fed chair, he is going to be talking tough because that is his entire personality, which he has built himself upon. And he's not going to be coming in when inflation is rising and talking dovish, right? It's just not going to be happening. He delivered a very tough speech. And as you can see on Polymarket right now, we have a 52% chance of getting a Fed rate hike in 2026. And rate hikes are crucial for Bitcoin because they tighten liquidity even further, and chances of Bitcoin going up then are of course dropping with each and every hike. So when we checked out this chart right here on our previous video, we were sitting at around 20%, I think. So right now we have peaked 60%. So I do believe that we are going to be getting a rate hike this year because the CPI and PPI data are still the same. But regardless, let's move on to the second stage, which is the economy visibly weakens. So we are entering this stage right now, in my opinion. High rates work within a 20 to 18 month lag. Unemployment starts ticking up meaningfully. Consumer spending slows. Corporate earnings disappoint. So economy visibly weakens. people failing behind on credit card bills and companies struggling to renew loans becomes obvious. Now, once this starts happening, it's only a matter of time before something cracks in credit, which is stage 3. So, a credit crisis begins when a specific sector, such as the commercial real estate or highly leveraged corporations, become unable to service its debt. This triggers spiking interest rate spreads, global contagion fears, and forced selling, which is going to be leading to rapid asset liquidation, which is, of course, going to be a huge crack in the economy. Now, what Fed usually does and what I expect them to do is use one of these cracks in credit as a reason to pivot, cover themselves with a reason to pivot. Even if inflation is high, if they have a crisis which they in quotes need to fix, in my opinion, that can be used as a cover to pivot regardless. So once a visible financial stability even happens, Warsh can cut rates under the justification of protecting the system, not because he's soft on inflation. They can also restart some form of liquidity support, branded differently than QE. Now, this is the exact plan which I think we are going to be seeing playing out macro wise. Now, where do we want to be buying Bitcoin? Well, we want to be buying Bitcoin every time we see a huge and lucrative dip, right? So right now is an amazing opportunity to buy, in my opinion. I don't know how, but even if we touch, for example, $30,000, this is still an amazing opportunity to buy because you never know when the bottom is going to be in. Even if I don't think that bottom is in yet, I am still allocating myself right here because the price is just good enough for me. But where do you want to be buying the most is definitely at stage 4, when you see something cracking credit and you see that Fed is starting to pivot. Why? Because this is the point where we are going to be seeing the most liquidity injected into the economy, and liquidity is the reason why Bitcoin even moves up in the first place. Without it, Bitcoin is going to be either stagnant or just dropping. And right now, once the liquidity conditions are tight like they are right now, you can see that Bitcoin is suffering to go up because there is just no money left in the economy to buy Bitcoin, right? It's all tight, it's all locked up, everyone is scared, everyone is panicking, and the conditions are just very, very harsh. So when there is money everywhere on every single fucking corner, then you definitely know that Bitcoin is going to be bought up and that is going to be rising. So we can't exactly time when the stage 4 is going to be happening. It could be happening in months, it could be happening in a year, you never know. You need to follow macro news, you need to follow what is happening in credit, in economy. But the main indicator which you can use is oil, because oil is going to be deciding if this thesis even holds. If oil stays low, the Iran situation stays calm, we are going to be seeing it playing out more quickly, right? We can expect the Fed to pivot more quickly because they can, of course, calm the situation down on their own. They can hold rates, right? They can lower the inflation, right? Basically fix the economy on their own. If the situation stays calm, if oil starts to drop even further, it's all going to be very much cleaner. But if oil spikes again and war escalates, then the stagflation risk rises and the recovery becomes messier and longer. So if oil spikes again, it's going to be devastating because stagflation is a real risk. It's basically a stage in economy where you get both stagnation, basically slow or no growth in the economy, and you also get high inflation. So normally inflation and unemployment move in opposite directions, but when the economy is hot, inflation rises, but unemployment falls. When the economy slows, inflation usually falls. So stagflation is basically breaking that rule, and it's a real risk because the big supply shock that we are receiving from high oil prices is going to be triggering high inflation. But the problem is that the demand is already weak and slowing because high interest rates from earlier have already slowed mortgages, credit cards, corporate borrowing, etc., and consumer and businesses are cutting spending. So if Fed raises rates to fight high inflation, they will crush the already weak economy even more, and if they cut rates to help growth and unemployment, they will pour gasoline on the inflation fire, right? So it's a lose-lose. They can't do anything, and this is the nightmare scenario because we are going to be entering a recession, which is not good. But ever since I have talked in my previous video, oil seems to have calmed down, right? Which gives more breathing room for Fed to, of course, pivot, which is a great sign. If oil stays relatively where it is right now or drops even further, that would be the best case scenario for BTC. We want to see better liquidity conditions for BTC start rising, but that is not the case right now. Right now, we're expecting a possible rate hike. The current ceasefire between Iran and US is on literal life support, right? It could still break, it could still escalate, and if oil continues rising, well, it's going to be a nightmare scenario macro wise for Bitcoin, in my opinion. Not to add the insane amount of outflows we are getting through our ETFs, right? We are on a record streak, I think, right now, which is around 13 days or so, which is crazy. So we are seeing an insane amount of outflows. The structure is still bearish, and in my opinion, it does not look good for BTC at all. The only saving point right now is if we hold this 60,000 structural support and continue raging. That's the best case scenario, but I don't even imagine it starting to go up because, of course, there is no good because there is no liquidity driver. There are no good macro conditions or reason for it to go up. So my expectations is that we are still going to be going lower. Hopefully we will start to consolidate and enter a range between $70,000 and $60,000, where we could wait out the whole storm before seeing a liquidity catalyst showing up and rising up further.